Okay. Good evening and welcome to our student loan forgiveness webinar. For those of you who do not know me, I'm Bernadette L. Harris. I'm the CEO and founder of the BTB Advisory Firm, and I have over 2 decades of experience working with entrepreneurs. And a lot of the entrepreneurs that I work with are struggling with student loan debt. And I'll be the first one to raise my hand to say, me too, right? And so um, the reason that we are here is because I am all about helping in any way that I can and being a resource to business owners. So I'm really, really excited about our guest today because not only is he going to help, no, he's already helping me, right? And so not only is he going to help me, but also be able to help other business owners the same way. So before we get started into the webinar, I just again want to finish introducing myself and then I will introduce our speakers. So my firm is BTB Advisory Firm. We work with small business owners, helping them to have better relationships with their numbers, helping them to be more efficient in their businesses, and also helping them to build a legacy, whatever that looks like for them. I'm really excited to open up the floor today to a gentleman that I met just recently, and just the information that he shared with me. I was like, hey, I know a lot of people who need you. So Stanley Tate, he is an attorney who specializes in student loan law. Never even heard of student loan law. But I like the whole specialized thing, right? And so when I have an issue, I like to go to a specialist, somebody that does just that. And that's all he does is work in student loan law. And he essentially provides people like me who have a lot of student loan debt with relief on whatever that looks like. So I am going to turn it over because I know if I read his bio, he's going to be like, you ain't got to do all that, right? So I'm going to turn the floor over to my friends, Stanley, and I'm going to let you do your thing.
I appreciate it, Bernadette. Thank you so much for having me here today. Hopefully, everybody can hear me. Do I need to cut the mic up at all, or are we good? All right, awesome.
Oh,
Um,
somebody said, turn it up, turn it up. Yeah.
all right, they may want to turn up their volume, though, too, though, on their side. Let's be clear. So hopefully that's a lot better right there. We good, right? All right, thank you. So the I've been doing student loan specifically since 2015. I didn't even know this shit was a thing until what it was is I was working as a clerk to a federal judge, and we were process all type of cases, and some of them were involving student loans. And I was like, man, we're not really doing anything here because it's incredibly hard to get a discharge of student loan debt. At least it was. And then when I set out on my own, I was doing bankruptcy law, and I realized, damn, I'm not really solving this problem that is a huge thing. Now, this is 2013, 2014 at the time. And I was like, okay, what do you do with student loans? And then I started looking more and more into it. And I realized how big the problem was and how complex it was. And that really got me interested just from a business owner perspective, right? Because you have a big ass audience that needs someone to serve them in that niche, that also needs someone that understands how to get through the rules and communicate in a very like simple, straightforward manner. And then the last thing I really like about it, there are so many rules, which means that there are so many ways to kind of play in the gray areas of things to get a result that works for my clients. And if I get a chance to like bend some rules to get something in favor of somebody, I live for that shit. So it's been like a really cool experience over the last decade now of doing this type of work. Um, Bernadette, when she approached me about this, she was like, yo, do you want to do a PowerPoint? And I was like, fuck no. And the reason why I don't like doing a PowerPoint is because you all are going to have questions that as I'm talking, you ain't going to be able to hear me because you just have your question in mind. And it's a lot of anxiety about your debt. There's a lot of shame about your debt. This may be the first time that you actually ever sat down and talk with someone about it. So I want to encourage you, like, this is a safe place to have a conversation about it. I want to give you the solutions you need to handle it on your own. And so you have a better grasp of what's going on there. Or if you want to reach out for help, we're happy to do that as well. We have a bunch of free to you resources on our website that walk you through it, and on our YouTube channel. And I'm sure Bernadette has already shared my information with you, but she'll do that after the call as well. So we're good there. With that in mind, I think the way Bernadette and I envision this is kind of having a conversation about it. And I want you all to interject with your questions in the chat. I like a dynamic platform instead of just us talking to you. So if you have those questions, feel free to chime in with them, and we'll go from there. And if there's just time on the back end, maybe we can do some cut on their mics and let them talk from there, Bernadette.
Yeah, sounds good. Let's do this. Let's go ahead. I have some polling questions, and that's just going to help us to see what we're dealing with. So I'm going to start with the polling questions.
All right, thank you.
All right. Oh, this is my first time doing polling questions, y'all. So I realized I should have done them like individually. My bad. So now I know. But anyway, take a few minutes and answer my 5 little questions. One, we just want to see who we're talking to. Are you self-employed, business owner? Are you an employee? Are you both? How old are your student loans? What is your student loan balance? How many years before retirement? And essentially, how has it impacted your life?
Yeah, those are all really good questions because like these aren't like right. There's not like there are big buckets of answers, right? But sometimes inside of that bucket of an answer, like what matters is how old have you had the loan? How close are you to retirement, right? And so sometimes people will talk about their debt to their friend and be like, "Oh, she did this." And I'm like, "Yeah, cool. Her facts are totally different than yours, even though y'all went to the same school, graduated at the same time, and had them that long. The rules are so funky that you could have a totally different loan that throws off the whole thing. We got to do something else." And so it's this poll really helps me kind of gauge what we're dealing with here. And just looking at some of y'all faces, it don't look like many of y'all just graduated. We out here a little bit seasoned in the face.
You know, I covered up my grades.
Girl, I can't do nothing about these little grays on this weak ass beard of mine, but we here. So, um, but it does matter because many of you are going to have loans from before 2011, and so you're going to be you may have a different category of loan, and so it's helpful to have that information. Do we got the poll done?
We have about 84% participation. We're going to give it another minute.
Yeah, appreciate that, Sybil. And I'll tell you that Sybil says in the chat that she's listening in for her financial planning clients. And I work alongside a lot of financial planners because you're good at what you do. I don't know shit about like IRAs, like I don't know none of that stuff. What I do know is these student loans, but we are kind of like serving someone along their financial journey. And so it's helpful to understand how these things work in tandem, right? Because there's going to be a lot of things you can do as a financial planner that's going to help someone decrease their adjusted gross income. Especially because like one of the cool things I learned is like a self-employed person, right? Depending on how your business is set up, you can double contribute to your 401k as like the employer and employee of your business. And if you do that, that's going to help lower down your AGI as well. And then we get to use that to lower your student loan payment. It's like all these little things, like these little decisions that can have a huge outsized impact on your financial trajectory. I live for that type of stuff.
All right, so we're still at 84%. I guess the other 12 are either
They said fuck it, so let's go.
Yeah, they just say they're not gonna do it. So let's just see. Let's see what we're looking at.
Yes, ma'am. All right, so we got a good split here: self-employed, employee, kind of both, mixture of, and then we have basically nearly 70% of our people have had their loans for going on over a decade at least. Cool. And then we got kind of range in student loan balance here. We got some people over that 200 mark. There's a lot of y'all that are like nearly half are over 100,000. How many years until retirement? Cool. We got many of y'all are kind of at that in between place right there. And then student loan impact debt to income ratio. All right, cool. That's good information. Bernadette, I got it from here to kind of start with a couple things, if you don't mind.
Go ahead. Do you think?
So I want to encourage you, all of you who have like this concern about like, man, my student loan crushed me, like trying to buy a home. Like I was doing HUD or whatever, Fannie Mae, and it held me back. I would encourage you, if you're still kind of holding on to that knowledge, let that go. And the reason why is because when Marsha Fudge took over FHA for HUD, what they did was they changed the rules on how they include student loans for your debt to income ratio purposes. Before, it used to be 1% of your overall balance. This is what they would factor in. And they flipped it now where they'll accept whatever your payment is under an income driven repayment plan, so long as that payment isn't zero. And so, for example, if you owe $500,000 in student loans, but your payment is $5, your lender will use $5 for your debt to income ratio purposes. That wasn't always the case. And
Right.
even today, there's still lenders who they're operating off the old 1% rules. And people come to me and they're like, I can't buy a house. I'm like, you absolutely can. I got people that owe $1 million in student loans that buy a house. Like, it can happen. We just need to find someone who is updated on the rules, that's working with you. Now, I said that was for FHA. It also works similar for a lot of conventional loans as well. And so if you're running into resistance there for your home buying process, I would encourage you that you may need to find another lender to work with, because the rules have changed on that. And that's a lot of what I see, is that people hold on to old information because there's a lot of scar tissue and a lot of emotional damage behind not being able to do something for a debt that you incurred 10, 15 years ago, right? And you're like, I just want to move forward and provide for my family. I want to do this, I want to do that. And this is blocking me, it's killing me. But I promise, the way I look at these loans, for the most part with people, I look at it from a perspective of, fuck these loans. Let's figure out how you live your best life possible despite them. And that's totally possible. We just need to figure out the right strategy there. And yeah, truthfully, sometimes people come to me and they got terrible situations, like, and we may be forced into bankruptcy. But you know what? That's still a way forward. It is not a financial death sentence. We just need to embrace our reality and say, okay, here's what we need to do. Here's the game plan. It's going to suck for 2 years, but so what? You're going to come out on the other side way better. Because if you don't do anything, you're just going to be in that shitty position for the next decade. And why do that? So I start off with that part right there. And if we want to dive into questions, we can kind of go from there, Bernadette.
Okay. I'm gonna look in the chat to see. I think we kind of looked at so one person said their loans aren't due yet because they just finished school. Then we have another person who's accumulated a student loan debt but didn't finish and is worried about adding more to that.
Yeah, I mean, that's a real concern. Like, you want to continue education, but you don't want to add on to a debt that's already sizable. Here's what I'll say is that, number one, we have to look at student loan debt like the unique beast it is. And what I mean by that is your mortgage. I'm sorry, is that feedback on my side?
No, I
Um,
think it might be. Let's see if it's somebody that needs to be
no
muted.
worries. What I mean by looking at your student loan debt like the unique beast it is that when you borrow a mortgage, your payment is due 2 months later, right? Like, you start paying on it right away. It ain't no forbearances. You got to pay them what you owe. Car company, you get that car loan, you got to start paying that thing back within the next month. Student loans, you take them out in school, you go 4 years, and then they're going to put forbearances on top of it. When you leave school, they're going to take that outstanding interest and add it to your principal balance. Now, for many of us, it takes us 10 years to try to get our financial foothold where we can actually, like, realistically tackle this debt, especially if you're like a first time college student. You ain't got nobody helping you out financially. And so you have to figure out how to get your kind of adulthood on, as well as trying to balance these student loans. And oftentimes our student loans are the last thing we take care of. So they built up interest for a decade or so. And because of that, because you get to postpone payments, because you get to do all these things, student loans operate entirely different from from other types of debt. And that means you can get to a point where you're ready to pay it off, but you owe double what you initially borrowed. And you're like, how the fuck do I even move forward? And then it becomes a defeating type thing. But I don't think it should. I think we should embrace the fact that, you know what? It is what it is. What are my options from here? And oftentimes that option is going to be to pay as little as possible until your loans are forgiven. Now, in your case, if you're someone who's going back to school and you're worried about adding out more debt, the real question is, do you have a realistic shot of paying your current debt off? Yes or no? And how I look at that is, that realistic shot is, let's imagine we're looking for a 1-to-1 income to student loan debt ratio. So if you make $100,000 a year, you owe $100,000 in student loans, you got a realistic shot at paying that off. But if you make $100,000 a year and you owe $200,000, it's going to be damn near impossible for you to pay that off. And so once we kind of go through that framework, okay, do I have a realistic shot at paying this off? Yes. Cool. Now, do I want to pay it off? That's a different question. And if the answer to that is yes, I do, then I will say, why do you want to pay it off? Well, because Dave Ramsey told me I need to be debt free, and I'll feel better if I'm debt free. Cool, I can respect that. But also understand, if you have a loan that has flexible terms and the government is willing to write it off, you are encouraged to kind of bend those rules in your favor to pay as little as possible and maximize your capital in other places. And that may be the smarter move for you financially. Now, whether it's the right move for you emotionally or mentally, right? That's a different question. But this is the type of like framework we want to go through and how we look at this student loan problem itself and say, okay, what are my goals? What are my aims? What are my ways out? And then make a decision from there.
Well, a couple of people in the chat are like, fuck them loans.
No, and I mean, and it's a very real thing. And like that, I firmly believe that. Like when I get 60-year-old people on my phone crying because they worried about student loans and Social Security, I'm like, girl, if you don't calm the fuck down and say fuck these loans, we're gonna be okay. We just need to find a way forward. But a lot of times they're fearful because they're entering into an unknown place and they feel powerless because there's a really bad customer service experience and they're not being given solutions when they call in. They're just being told more problems. And so that amps up the anxiety. And this is where I come in and say, okay, cool. Here's what they can legally do. And once we understand what can legally be done, then we can kind of decide how best to move forward.
Okay, so is it a realistic shot of paying it off still if it's 1-to-1 after 25 years in repayment?
You're not even worried about after 25 years of repayment. There's actually, and this is what Bernadette heard me talking about this at a conference with another colleague of ours that had, she had her loans for 20 plus years. And so right now, the education department has what's called the payment count adjustment income driven repayment waiver. And that's a big ass mouthful. Here's what it actually means. The government has a program that writes off your student loans after you've been paying on them for 25 years for grad school loans, 25 years for grad school, 20 years if you only borrow for undergrad. But the government has this program that writes off your debt after 25 years if you've been paying based on your income. And so you have to make 300 monthly payments, 25 times 12, based on your income. Now, a lot of people, they've had their loans for 25 years, but they've had a lot of forbearance. They've had a lot of deferment. And they're like, shit, do I qualify for this? And the answer is normally no, because you have to have 300 qualifying payments under an income-based type plan. Well, that payment count adjustment income-driven repayment waiver, what it does is it looks at your payment history going back to July 1st, 1994, and it says, hey, we're going to give you credit for every month you were in repayment, regardless of what payment plan you were in, regardless if you actually made a payment. We're going to give you credit towards that 300 months, that 25 years. We're also going to give you credit for your time in forbearance. So if you had 5 years of forbearance, you get 5 years of credit towards that 25-year forgiveness. And if you had some deferments, we're going to give you credit for some of those deferments before 2013. And so with this program, you may have seen it in the news recently where Biden wipes out $39 billion for 800,000 people. That's the forgiveness program I'm talking about. It's where the government looked at this record going back to July 1st, 1994, and gave people credit towards forgiveness. So if you're someone who's in a 1-to-1 ratio 25 years later, I will tell you, you probably need to explore getting your loans forgiven under this program versus worried about paying off that debt.
And what's the name of the program again?
I'm gonna drop it in the chat real quick, but it's the payment count adjustment income driven repayment waiver.
Oh yeah, that is my fault.
Girl, it's a lot. They don't do a great job naming it. Now, there's what I'm going to give you is a FAQ kind of page, and it's going to have a lot of information. It's going to be very, very overwhelming. I'm also going to drop a link in the chat for a YouTube video we did that walked you through it in very plain language. about, and it's the title is it time to consolidate? But ignore the title. Just kind of pay attention to the breakdown that happens in the video.
So another question, you ready for the next question? Or are you?
Looks like I need to stop searching while I'm on the internet. My shit moving slow as hell. Sorry about that.
Well, we can send out like a list with all the links.
Yeah, I'll drop the resources as well.
Okay. So
Now, this,
the next question. Oh, go ahead. Were you?
no, I was looking at Kristen's comment or question about if they are not direct loans, does that waiver still work? And the answer is a little bit complicated. This is where I said many of you have loans from 2011. So if there are those among you in the audience who throughout the pandemic, your loans have continued to grow in interest and you've continued to have payments due, right? Then you likely have what are called federal family education loans, FFEL loans. Those loans are federal loans, but they're backed by a guarantor, like a third party. They're owned by the government, but they're not directly owned by the government. So this applies to you if you have loans with like Navient right now, they're federal loans, or you have loans with American Education Services or ECMC. These types of loans, these FFEL loans, you would need to consolidate those loans into a direct consolidation loan in order to qualify for that waiver. Now you can consolidate for free on studentaid.gov and walk through there. I will tell you, for those of you who you're married or you have higher income, consolidating, yes, puts you in line for forgiveness, but then you have to make sure you strategically protect yourself from having high monthly payments once you consolidate and you're waiting on loan forgiveness. And that's a much more complicated question that we won't be able to dig into here, but it is something you want to be aware of.
And you know what? When you said that, one of the things that I was thinking about from the tax perspective, those who are married, a lot of times you want those. That's when I see couples file separately. So that,
Yeah, I think so. That's what people do. They'll say, "Oh, we file separate. We keep everything separate, so my student loan payments aren't calculated that way." And that is one way to do it. And I'll tell you, if you're someone who has been doing that, a really cool thing is the IRS lets you go back and amend your tax return 3 years later to go from married filing separate to married filing jointly. And so you can always go from married filing separate to married filing joint, but you can't go from joint to separate. Why is that important? Well, you may end up with a higher tax bill because you filed separately, but you did it to get a lower student loan payment. But then once you turn in your student loan paperwork, there's nothing stopping you from going back and amending your return to go from separate to joint. You have no duty to update the education department about your choice to change your tax filing status because you're certifying your information at the time you turn it in. And if that changes later on, fuck it, wait until the next year. And so that is a strategy that some people deploy. Another one is, cool, you file taxes separately, jointly. That's what you did last year. But when we filled out the student loan paperwork, the relevant question is, do you have reasonable access to your spouse's financial information? What does reasonable access mean? And this is where I go back to that gray area shit that I live for. And so if your spouse tells you, I refuse to sign this application, then do you have reasonable access to their paperwork? Arguably, no. And at that point, you get to use your pay stub. And so you get the benefit of filing jointly, and you get the benefit of having your payment based on your income alone. Now, there's a little bit more that goes into it, but at a high level, like these are like the types of strategies you can deploy to have a holistic financial experience that protects you, not just a one-on-one.
let's see. What we got? I lost my. Okay, so direct Stafford unsubsidized loan, 2 different rates. How to not only get rid of them, forgiveness, but consolidate if necessary for the cheaper rate.
That's a terribly framed question. I don't even know what to do with that right there. Can we kind of parse through that to try to help me out here?
Latoya, you're gonna have to reframe that. All right. So
how to not only get rid of
are you asking, can you get forgiveness? And if you can't, how do you consolidate? Is that your question? Come
I think
back,
the
come
question,
back in the comments for us. And
yeah, I think this question is about the interest rate when you consolidate, and so that's the question. I will tell you, your the interest rate for your consolidation loan is not credit based, so it doesn't matter what your credit score is. As a result, your interest rate is going to be the same no matter what. Now, what kind of dictates your interest rate is what are the current rates of the loans you have. And so, in your case, if you have a mixed rate, so you have one that's 6.08 and another one that's 6.6, the government's going to take a weighted average of those two and give you that interest rate. Now, let's kind of back into this question here. Like, the person's asking a question about interest rate because they're concerned about the loan balance growing. That's the only reason why you care about the interest. But if your goal is loan forgiveness, then you
you
really don't care about the interest rate. You think you do, you think that matters, but you actually don't. And you'll fight me and say, "No, I do care about the interest." And I'll tell you that's kind of a silly position to take. And because in order to get your loans forgiven, you have to consolidate. And so it doesn't matter what the actual interest rate is if you're going to get the loans forgiven. Now, there's a question of whether or not you trust your loans are going to be forgiven, especially when you've had a mistrustful process. Your loans move from here to there. Your interest, all of a sudden, you owe double, triple what you originally borrowed. I get that. But that's, again, kind of where we go from like, there's a lot of scar tissue behind the thing. There's been a lot of like not feeling powerful inside of the conversation, knowing what your actual rights are. And so I would tell you, once you know what your rights are and what can be done, the interest conversation kind of goes out the window and it just becomes, how long before I get these loans forgiven? Tell
right.
me what that is so I know what the end of the road is. And let's get there as cheaply as possible, as fast as possible.
So we got a question about consolidation. So when you consolidate, does that put your payment terms back to zero? I think I know the answer, but I'm gonna let you
The
answer.
answer to that is normally yes. It does reset the clock towards forgiveness normally, but that's exactly this payment count adjustment that I'm talking about. It gives you retroactive credit. And so when you consolidate, like let's say you're someone who's working towards public service loan forgiveness, you're going to consolidate and your payment count's going to go from whatever it is down to zero. You're going to freak the fuck out. And I'm going to tell you, calm down. Because once the waivers apply to your account in a couple of months, it's going to increase back up. Now, I've been doing this waiver. They've been in place basically for the last year, some change now. And I've rolled this wave with so many people. And I promise you, it works. We've wiped out $417 million of student loans for my clients in the past year under these programs. They work. There may be a lot of like negative talk on Reddit or social media about it. I can tell you that those people don't know what the fuck they're talking about, or they did something wrong, or the process just hasn't reached them yet, but it works.
Okay. Let's see. We got some funny stuff in the comments too.
I mean, Kim is on one. She act like we ain't got no mixed company in here. That's what I'm talking about. I don't know. I love it though. I'm here for it. But the question was about capitalization. Is someone asks, isn't my interest going to be added to my principal balance when you consolidate? The answer is absolutely. But what do you stand to gain? If you're someone who was in line to pay off your loans and your income is substantially high enough where there's no way for us to get you a lower monthly payment and you are going to pay off your loans before you reach the forgiveness finish line, then yeah, that's a real consideration. But if you owe 200,000 and then $100,000 in interest, who gives a shit if you now owe $300,000 in principal? Because it's monopoly money at that point. You was never going to pay this off. But if we can get an opportunity to speed up our process towards forgiveness, we should take advantage of that. Now, the counter to that is, well, what about the taxes? I hear you. Right now, student loan forgiveness is tax-free for the next 2 years. They may continue that law. I don't know. But it ends in the end of 2025. And if it goes back to what it was, where you have to pay taxes at the federal level, then it's going to increase your marginal tax rate. And so you'll pay a percentage of that, or whatever that difference is. And it may not be as bad as you think. It ain't going to be as bad as what you owe, that's for sure. And then there's also the insolvency rule that if your liabilities are greater than your assets, you can walk away from the tax debt due to exclusion. And if you're someone who knows that's going to be a huge liability for you, and you're getting close to retirement, you may want to consider planning for retirement by setting up trust, a life estate trust. This is what I see a lot of my wealthy clients do who are preparing for Medicaid, Medicare, is they make themselves look broke on paper so then they can qualify for Medicaid, Medicare. So it's the same principle just applied towards student loans. You take your assets, you shelter them off in a trust, and then you look broke on paper, and then you get to get all these extra benefits. And so it just takes strategic planning on your part. And in the worst case scenario, let's say you don't do all that and you got to pay taxes on it. You can file bankruptcy 3 years later and that shit goes away.
And there's that. So,
I think we need to kind of. I see people are very precious about their credit scores, and they don't look at this money thing like the game it actually is and say, okay, I have a student loan debt, I owe X. It's going to take me Y to pay it off. That's a long ass time. I could go ahead and mess up my credit for a couple years, get rid of this thing at a stupid discount and move on, or whatever that may be, right? So, or I'm retired now, I'm 70 years old, and I mess up my credit score for 2 years because I filed bankruptcy to get rid of this tax debt. That sounds like a win to me. You just have to be prepared for these things.
yeah. Let's see. Trying to make sure I don't miss any questions because the chat's moving kind of fast.
Honestly, there's another one about I've worked at various nonprofits for 10 years. Do I qualify for forgiveness based on that? I don't know, maybe. So the way the public service loan forgiveness program works is you have to work full time for the government or a nonprofit. Full time meaning now 30 hours a week on average or more. And that program, you start counting your time for a qualifying employer, government or nonprofit, going back to October 1st, 2007. And so you can count any time after that. Why October 1st, 2007? Because that's when the program started. So there's a potential that you can get credit towards loan forgiveness. But let's say you are no longer working for the government or a nonprofit. You can get that credit towards forgiveness, and they'll say, yep, you got all the credit you need. You're eligible to get your loans wiped out. But you can't get your loans forgiven until you go back to working for the government or nonprofit for at least a month, because you have to be employed by a government or nonprofit at the time you apply.
Okay. I got one that was direct DM to me. I'm a part of the Sweet and Corona lawsuit due to the school I attended. I have been waiting for over a year for a discharge and was told been waiting for over a year for a discharge and was told that they, at this particular time frame, which would be discharged. What?
Yeah, no. So what she's saying is there's a big ass lawsuit, Sweet v. Cardona. This lawsuit started under Betsy DeVos and Donald Trump. So towards the end of Obama's administration, there was a school called Corinthian Colleges that shut down and left a lot of people stranded with a bunch of debt. Obama stepped in, him and Arnie Duncan stepped in and was like, yo, we're going to write these these loans off under a program called Borrowed Defense to Repayment. This program had never been used before. And so they went ahead and said, okay, we're going to do it. But then Obama left office, Trump stepped in, Betsy DeVos stepped in, and they sat on the applications for 5 years, 4 years, even as more and more people came into play. So then a class action lawsuit got filed, and people were like, yo, we need to get our applications processed. And then that lawsuit finally settled last year. Well, actually earlier this year, it settled, and or was it last year? Whatever. They settled, but the point is they agreed to wipe out a bunch of loans for people. But there's been a lot of litigation afterwards. And so there's people that's told you qualify to get your loans wiped out, but the loans are still sitting on the books today. I will tell you, if that's the case for you and you are a class participant, your loans are going to be wiped out at some point. I've had some of my clients get that forgiveness in the last 2 weeks. Ain't nothing you can do to speed it up. You just got to sit there with it. It's going to be gone. Ain't nobody you can call. Ain't nobody you can irritate. You can go on Twitter and yell at somebody, but it ain't going to change nothing. It happens when it happens.
Got it. Let's see.
There goes the next one. What's the best option for a parent that's a teacher getting loans for kids for undergrad? All right, so for those of you who are parents who are now trying to look to borrow loans for your kids, what you need to do is decide who's the brokest parent among us. So if you got the income and your child's parent, the other parent has a lower income, they likely need to be the one taking out the Parent Plus loans. Now, why do I say that? Parent Plus loans are really, they're federal student loans. but they have difficult repayment options for people. But the cool thing is you can borrow as much as you want to cover your child's education, and you can carry the burden where you leave them student loan debt free. Um, but you're going to be stuck paying a bill on it. Now, if you're the parent who earns more money, you're going to pay more even based on your income. But if you're the parent, even the unemployed parent or the retired parent, they can do that. And let me give you some game. One of the really cool fucking things you can do is you can, if you're, let's say you have a grandparent who is retired, you can go through the legal process of assign custody over to the grandparent, then have the grandparent take out the federal student loans on their behalf. And then that retired grandparent who only draws Social Security is going to pay zero on those student loans, even if they owe $400,000 or $500,000. Now, of course, that sounds weird to say, oh, I'm going to assign custody over to a child. Bro, they fucking 18, 19 years old. It doesn't fucking matter. Like, what are we talking about? Like, just go do it and play this game. Same way people do when they go apply for FAFSA. You have wealthy families who assign their kid to their broke ass uncle or whatever to go ahead and get more FAFSA money. It smells bad. It's like, damn, you can do that, but ain't nothing illegal about it.
Sweet. Okay, I got another DM question. I've worked in a nonprofit for the past 8 years, have a nonprofit salary and living in an expensive city that I can't afford loan payments and would defer them. I signed up for the forgiveness loan program in 2019. Then the pandemic paused the payments. Payments are about to kick back up. Can I ever be able to have these loans forgiven without having to make the required consecutive payments before being eligible, I think, in 8 years?
Shit, I fell asleep. That was a long ass question. I think what the person's asking is, how do I get out of this without paying another dime towards these loans? And I don't know the answer to that. It sounds like you may not have enough credit towards loan forgiveness based on your loans. And so you're going to have to pay something. The question is, how do you pay as little as possible? So I don't have any solutions where you're just going to walk away from a debt. We got to do something usually. And that's a small price to pay to get rid of it. Now, for some of you, like, I done had these loans 30 years. It's time for them to go. Cool, I hear you. We still got to do this if you want to get it done, yes or no. And it sucks, but it is what it is. So, short answer, I think that that person's likely going to have to pay something, but I would honestly have to look at their loans to know what their options are. I really should have bought the bottle of bourbon down here. Like,
You slipping, bro. You slipping.
I usually have it over here, but then, you know, I move shit around trying to get a fancy little setup with a good camera, good lights and shit. So
Next time. Okay. Christian said the next shot's on her. So
all right, mom 70 has Parent Plus loans. How can I help her pay zero? It depends on what her income is. So if your student loan payment is based off of your taxable income. And one of the cool things I was talking to Bernadette about is, for those people who live abroad, and this is like a side note, I'll get to your question. I have a lot of clients who live overseas. And one of the craziest loopholes is that if you live overseas, there's what's called the Foreign Earned Income Exclusion Act, and it allows you to exclude up to like $119,000 from your taxable income for that year. And so that means you could earn $120 something thousand dollars, well, like $140,000 for the tax year, and your student loan payment is going to be zero because they look at your adjusted gross income. And so if you use that foreign earned income exclusion, then your adjusted gross income is going to be a lot lower, and it may be zero, and then your payment on your student loans is going to be zero. So you could effectively move overseas and pay as little as possible and get your debt forgiven. Now, bring it to the person that's retired. If their income is only Social Security, typically speaking, it's not going to be taxable unless it's above a certain amount. And when it is taxable, it's going to be a low amount unless they have like a pension coming in or something like that. So if there's someone that's just drawing Social Security, then all they have to do is just say, I don't have any taxable income, or they can turn in a copy of their tax return, and that's likely going to be a very small AGI number, and their payment's going to be zero.
So one thing I want to, a caveat to the foreign earned income exclusion, you got to
stay your ass abroad for a long time.
Yeah, you got to be out of the United States 330 days a year. So there's that. So you can't have a house in Mexico and be in Atlanta all the time. You gotta, yeah.
You gotta stay calm. But this is no different from like what the Gutenbergs. I was reading this profile about the Gutenbergs, and like the muffins behind the Guggenheims, the Guggenheims behind the museum. They have to fly to like Nevada, like once every 4 months so they can get the tax benefits of the state and they can avoid like a multi-million-dollar tax bill. But you just got to go do this thing. So if that's something you've been thinking about going overseas, that's a strategy you may use. And if student loans were holding you back, I promise it should not, because there's always a way around a lot of this stuff.
Yeah. Somebody asked me
Dacia,
about
that
living
is
in
exactly right.
Mexico. It's part of it.
Yeah. I think I'm saying Miss Thompson. Let's go with that, or Mr. Thompson, or they Thompson. It is the Public Service Loan Forgiveness Program is the program for public service workers, and if you're interested in learning more about that, go to studentaid.gov. You can also go to my website. You can also contact a company called Mohela, Mohela. They're the company responsible for processing all public service loan forgiveness applications for the education department.
I'm looking at the questions that were submitted just to see if I feel like some of them we've already answered. Yeah, I think so.
I feel like I didn't help your replay here by cussing as much as I did. I'm sorry about that.
So one of my core values is authenticity. So you just show up the way you are. So I would not want you to be anything other than who you are. So
yeah. You say we grown. I was up at a national conference for the bunch of old ass white folks up there, and I'm just being me because like the cool thing is when you know you in the power seat, you just get to show up because you know what your value is. And so I show up like this at a national conference. It was like, I love what he has to say, but he just seemed a little bit unprofessional. I was like, but bitch, you use my strategy to get your loans forgiven, so shut the hell up. All right, let's see what else we got. Let's see. Can I consolidate my parent plus loans with my federal student loans? I don't want this over my parents' head. So let's kind of parse into that. They're not your parent plus loans. If your parent borrowed the loans, they're their loans. And there's not a way to transfer them to your responsibility unless you turn them into private student loans. And that's a terrible idea. And so from that point, you need to kind of just help your parents manage the debt effectively and kind of walk them through what their options are.
Yep. So I think we've answered most of all of the questions that are in the chat. If you all have a question that hasn't been answered, speak now, forever hold your peace, because we're not going to be here much longer. Let's see. And what we'll do is, because he's mentioned a lot of resources, we'll send out an email, or like just a consolidated email with all the links and stuff like that. So he's not using his internet to find that stuff right now. So we'll send all
I
that
promise
out.
you, because that thing was struggling. AOL dial up, like I was trying to download Nelly CD back in the day.
Yeah.
Is there a list of rights for, does it depend on your situation? That's like such a broad question, what your rights are. If you want to know what your rights are to student loans, look at the contract that you signed. And so you can go ahead and grab that from the Department of Education's website. Those are your rights. And they'll be listed there. And there's going to be regulations in 685, 34 CFR 685, Code of Federal Regulations. You can look them up there, but it's a lot of stuff to read and a lot of stuff to know. This is a good question. So, what are your options for loan forgiveness if you have not worked in public service? So, we've already talked a lot about it. There's going to be 3 big options for loan forgiveness: public service loan forgiveness, total and permanent disability forgiveness, and then there's the 20 to 25 year forgiveness. And so, if you're someone who only borrowed loans for undergrad, you can be eligible to have your loans wiped out after 20 years of paying under an income driven repayment plan. And right now, the government's giving you retroactive credit towards that forgiveness opportunity. And if you're someone who borrowed loans for grad school, it's 25 years. And you'll say, well, what if I borrow both undergrad and grad school? Then it's 25 years for all the debt. And you want to look into it and see, okay, what type of credit am I going to get towards forgiveness? In a way that there's a free tool on my website. If you go to tatesq.com, in the upper right hand corner, it's called the text tool, the TXT tool, and it analyzes your data and tells you how much credit you could potentially get towards loan forgiveness. But the way it works is the government will look at your payment history going back to July 1st, 1994, because that's when the first income driven repayment plan started. And they're going to give you credit for your time in repayment, forbearance, and deferment. And if that totals up to 240 months for undergrad loans only, or 300 months for grad school loans, then you'll go ahead and get your loans forgiven. And if it turns out that you're short 20 payments, then you'll need to make the remaining 20 payments based on your income, and then your loans will be forgiven. And so it's very straightforward. It's there's a lot that goes into it, and a lot of it is like the emotional weight of not wanting to mess something up. But there are ways out of this. We just need to kind of follow the path.
So I dropped the link to his website in the chat, where you can go. So tell them about basically how they can work with you.
So we don't do free consults. You'll go ahead and go on the website, tatesq.com. There's going to be a link in the right-hand corner that says Let's Talk. If you want to request more information before you decide, it'll be right there. You'll get a pricing deck sent to you that says, here are my prices for things. And if you say, you know what, right away, I just want to book a call with you, it'll be right there. It's going to be $200 for 20 minutes. You'll send me your information ahead of time. You'll be like, man, 20 minutes ain't enough time to get through all this. Dude, I done met with 20,000 damn people over the years. I got this shit. Just trust me. Let me do my job. Give me the information I need. I got you.
Any other questions?
Government contractor versus actual government worker. So I think this is a PSLF question, public service loan forgiveness question. In order to qualify for public service loan forgiveness, you have to be employed directly by the government or a nonprofit. So if you're someone who works adjacent to a public service position, but you are employed by a private company, sorry, boo-boo, you can't get that credit. Unfortunately, you're like, I'm doing the same job. Yeah, but it comes down to who your employer is, not what your actual job is. And what I mean by that, you could be the mayor, you could be the janitor. You work for the city, you're going to get your loans forgiven. Doesn't matter what your title is. What matters is who's your employer.
Yeah, whose name is on that W-2?
Yep. Next question. Are you seeing many employers matching student loan payments? I don't know. I don't get into that. That's people come to me about how to pay back their loans, and forgiveness options, like how their employer handles stuff. I usually only see that with like VA type related things or government related things, because they have these loan repayment programs, and these loan repayment programs allow you to like double and triple dip into different benefits. But like regular employers, I can't even tell you in the 10 years that I've ever seen one of those.
All right, so I don't think we have any more questions. What I want to say is, one, thank you guys for showing up. And thank you, Stanley, for showing up. And actually giving us some great information. I hope that if nothing else, you leave with more information and you're able to use that information for whatever, to be better, to do better, to change your situation. I would encourage you to reach out if you feel like he can help you with your situation, or reach out to see if he can. It's just a matter of, are you going to do what he says, right?
Yeah. No, well, and I promise, and some of you would be like, man, I don't have the money for it. We have so many free to you resources. I say free to you, right? Because that shit is expensive as hell to me to create, but they're all out there that walk you through it. You just, if you can't afford it, then you got to suck it up and put the time in and figure it out. We make sure that we give away all of the knowledge that we have as well. You're really not paying me to tell you something you don't know a lot of times. You're paying me just to kind of confirm the right strategy for you and put you on the right track, and kind of take that emotional anxiety off of you and say, I got this. You chill out. You go be great at what you do. I'm gonna be great at this.
Yeah. And I'm here for that. Like, as far as I pay experts to do what they do, because I know how to do. I got a short list of shit that I do really well. And that's the stuff that I do. And the stuff that I don't do well, I pay other people to do it. So
yes, ma'am. But yeah, I don't have no sales pitch for you. If you want to reach out for help, great, let's go. If not, just enjoy all the free materials. Sign up for the newsletter. I do a recording like this every week for my for the newsletter, where we just talk through what's going on in the news and keep you up to date. So I wish you all well. Thank you so much for having me here, Bernadette. I look forward to the next time that we have to talk about this stuff. And I appreciate you putting on your earrings. You look very cute.
I'm over here
Look
getting
at
all
that beat.
cute
Look
for
at
you.
that beat. All right. Well, Thank you. You know,
All
and
right.
just like a light-skinned dude, I just sit here in a hoodie and just try to be cute with a smile. So I appreciate you.
Typical light skin.
Have a wonderful evening.
All righty. Thank you guys. Have a good night.